Good morning, master traders and money magnets. It's a new week of trading here, and I'm so happy to see everybody. Good morning, good morning. We woke up this morning, guys. We woke up. You know what that means, right? It means the devil was pissed. Heck yeah, he was pissed that we woke up this morning because we got another opportunity to pursue our dreams and make it all happen, okay? It all's gonna happen. And I tell you this, guys. Low volatility week last week. 9 green days in a row. We'll count it together. Starting from, we had that red day on April 21st. And then the green day, April 22nd. Started from there. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 higher closes in a row. Low volatility. If you played it level to level, you may have came out okay. If you've been swing trading calls or long since we broke out that downtrend line, you may have been okay. Low volatility, but 9 green days in a row. And I have to remind us, guys, that price action is the shepherd, and you and I, we are just sheeps. We follow the price action. I know it's a very popular thing in the trading community, calling tops and bottoms. But for the few people, for now, for the people that does watch Uncle Charters' content, you know I always recommend us not calling a top and not calling a bottom. But instead, what do we want to call? What do we want to watch out for? If you're looking for a top, what is the setup, the main setup that you need to see? We need to see a false breakout setup. The market has been giving us higher closes, okay? And it's been clearing resistant level. Low volatility, but they still been clearing resistant level. We need the false breakout setup. And usually in a situation like this, stairways up. When they say stairways up, they're talking about that low volatility move to the upside. That last week was a good example of what a stairway up is. But you need that false breakout setup if you want to call a top. And also an elevator down style move would be very, very helpful, okay? An exhaustion gap would be very, very helpful. The point I'm trying to make is, guys, instead of calling the tops or the bottom, we want to watch out for the signs, okay? The scenarios. You look to the past. Every time there was a top put in, what did it start off with? It either started off with a false breakout setup, or it started off with an exhaustion gap down. Okay, I can show you guys plenty of examples of it, all right? But I think you guys already know about this. You guys are master traders. I'm just here to remind us, okay? I'm just here to remind Uncle the Reminder. That's my new nickname. Uncle Chart is the Reminder. I'm here to remind my master traders and fellow sheeps to follow the price action and do not call a top. I know we had 9 green days in a row. There was some people saying we have 5 green days in a row. It's time for a pullback. Some people say we have 4 green days in a row. It's time for a pullback. We didn't get that pullback. SPY continued to melt up. Melt up. That's why I like to say melt up. When it's going up, this, low volatility, it's just melting up. Melting up. So we need that false breakup. We're going to call a top. Otherwise, we are still overall bullish on the SPY. Okay, now I'm going to give you guys the bull case scenario and the bear case scenario. And it's very important that you guys listen to both case scenarios. Don't skip over it. YouTube algorithm does show me when you guys skip. Not many people like to listen to Uncle's recap. They mostly listen to the bear case scenario. Even the bull case scenario, they don't really listen. They leave. So I'm asking you guys, don't just listen to the bear case scenario. Listen to the bull case scenario as well. I want us to be prepared. Please allow Uncle to serve you. All right? Allow me to serve you. The only way I can serve you guys is if you allow me to. And you guys, if you do allow me to, then you listen to both the bull case and the bear case. My job is to serve you guys by making sure you guys are prepared. I want to help you guys make money. But if there's ever a situation where the market's not going in your favor, I at least want to help you manage risk. Okay? I want to help you take care of your money. Because you have to look at money not as something that's evil, okay? But look at it as a good tool, a positive tool, Okay, and you have to take care of your tools. Don't just get it when you get you work hard, you buy yourself a new hammer, but then you get that hammer and imagine you just throw it around everywhere, you misplace it. You got to take care of your tools. Respect your tools. Okay? So you got to respect money. You have to have a good relationship with money. It's not just about attracting and getting money. It's also about when we get it, we got to take care of it. Imagine you see that girl or that guy that you like for so long and you want to be in a relationship with them. And then you finally get in a relationship with them and then you treat them like crap. That's not how you want to treat money. When you get in a relationship with them, you want to treat them good. You want to have a good relationship. You want to take care of them. So that's why risk management is so important. It's attractive to the energy of money. Does that make sense? When money sees that you know how to take care of her, she's going to want to be next to you and around you more. So don't underestimate your ability or the importance of risk management. Don't just think get money, get money. Okay, you got to think take care of money, attract money. What are things you do to make you attractive, handsome, beautiful to the energy of money, to make it want to come to you? Does that make sense? Because you can learn to trade all day. You can learn all the tips and tricks to trade all day. But if you don't have the right mindset, it's going to be hard for money to want to be around you. If you're talking crap about money, imagine you talking crap about somebody. You think that person want to come out and hang out with you if you're constantly talking crap about them? Or you're constantly using them for what they can do for something better? That's what I'm trying to say. You don't want to just get money and then, oh, you see something better, you get rid of money. Treat money better. Do things that are attractive with it. And what is attractive to money? Being a sheep style trader with great risk management. Okay, that's Uncle trading philosophy. So let's get into the bull case and the bear case, okay? Now, I talked to you guys about the golden level, the golden zone based on Fibonacci level. I have fib levels from the top all the way back in February to the low in April 7th low. The 61.8 fib level is at 563, which is often referred to as the golden level or the golden zone. We cleared that level yesterday, but we're currently gapped down a little below it as of recording this video. So 563 is the equilibrium level to be bullish or bearish, guys. Okay? If we're above 563, then last week breakout stays intact. Okay? If we clear 564, 565.5, 567, and the fib level at 568.7, we are bullish. More upside is incoming. And I would be eyeballing the 200 daily moving average. I have resistance at 570, but the 200 daily moving average is at 573. Okay? If bears are ever going to step up, that would be the area to step up. They should step up now if they want to. But if we hit that 200 daily moving average, they really need to step up. Because a recapture of the 200 daily moving average would be extremely bullish. Extremely bullish, okay? So that's the bull case scenario. Clearing those resistance levels, stay above 563. Clearing 564, clearing 565.5, 567, and 568.7 should send us to the 200 daily moving average around 573. And a recap to that would be very bullish. Now, the bear case scenario is staying below 563. That will be a start. It's doing that now. But it need to show some follow through by breaking down 562 and 560. Those two support levels fail. It's a good chance we're going to drop down to 558 and 556-ish. Now, 556-ish is around where the 50 daily moving average is. So below 556 would be very bearish. We can go for the gap fill around 554. And below 554 would be gap fill. And then should send us lower back down to 550 or the 548.6 fib level. Now you guys also see I have this uptrend line. And if we're going for a third test, that would need SPY to drop all the way down to the low 540s. Imagine that. That's more than a $20 drop to the downside. Very nice. Okay, so remember 563 is the equilibrium level today. Above it, you want to look to long at 564 and 565.5 clears, especially above 568.7. Big win for the bulls. And if we're below 563, play it level to level. Look to short at 562 fails with 560 and 558.6 in play. Play it level to level, and if you want to play a bigger move, use your runners. Triple Q here. Now, unlike the SPY, Triple Q actually hit the 200 daily moving average, okay? Bears did step up around there and showed some selling pressures around 484.6 as of recording this. It's pretty decent gap down from where it closed last Friday, okay? So from here, I have resistance at 486 and 488. If bulls want to step up, they must clear 486 and 488. Getting above 491 and 492.5 would be very bullish because that would be a recapture of the 200 daily moving average and a fib level that I have, okay? Now, if we are to get bearish, staying below 488 is a must. We're below that now. Bearish follow through would be to break down 484.5 and the fib level at 483. If those levels fail, guys, pullback time. 477 would be a target for sure. Gap fill is around 475. Below that is gap filled. The gap would be filled, obviously, with 473, 471 fib level, and 469-ish in play to the downside. I also have this uptrend line. So if it's pullback and we go all the way down for the third test, it would need Triple Q to drop to the low 460s. All right. Now, okay. So yeah, if that's the bear case, bull case, get above 488, 491, and 492.5. We are heading up higher. NVDA look like it's battling around that 115 level still. Yeah, that 50 daily moving average now is around 112.4. So I do have support at 112 and 110.7 fib level. Those levels fail, guys. It would be very bearish, especially with losing the 50 daily moving average, DMA for sure. All right, it would be very bearish. 112 and 110.7 fails. Look to short, which should send us down low 105 or lower. Below 105, bears in full control, breakdown mode, okay? Look like a big bear flag. Breakdown is 105. Now, if we manage to clear somehow 113.5 and 115, that would be bullish. Okay, been a tough sell zone around this 115 area all April. Well, it's a new month. So if it wants to break out, 115 is the level. 113.5 and 115, 118, 119.6 or higher would be my targets. Okay, could even hit the 200 DMA. Well, Tesla. It's been chopping. You guys see the flag or the, the horizontal channel. Either way, it's battling at the 200, and the bears will not let price pass. Okay, if they're finally going to show some follow, we could get some M pattern. We got to be careful with that with the M pattern, but I tell you, I do have support at 284, 282, and 280. If we fail, there's a good chance we go touch, we could go hit 275 and 270. And below 270, the M pattern could be playing out. Below 270 would be extremely, extremely bearish, okay? Now, if we are to get a bounce, you see the battles at the 200 daily moving average. All right, 286, 288, 290, and 292 are resisted level. The bulls absolutely must clear it. 292 especially to get some move back to the upside. We could be consolidating for an explosive move, either to the downside, to the upside. But if it is to the upside, 286, 288, 290, 292, the levels that must clear. If they do, guys, 300 to the 315 zone is my target. Coin is battling. It hit that uptrend line for multiple times, 4 times actually. Breakdown for today is 203, and guess what? We're below that. So this could be one of those breakaway gaps. And in this context, bearish, okay? So to avoid that, bulls need to clear 203, okay? 205 and 207, and we are bullish. 203, 205, and 207, we are bullish. 210, 212 or higher would be incoming. I think we can break 212. But overall, bearish below 203, okay, guys? We break down 201, 199, 197, 195, 193, 191, or lower incoming. I'm bearish below 203. And guys, here is the VIX. You guys know the VIX measures volatility. You guys know I want to see the VIX go up. I mean, I'm going to trade it and follow it. I'm going to be obedient to the price action, of course. But, I like to say what I want sometimes. And I do want the VIX to go up because more volatility, it just makes day trading better. You can swing trade, of course. You can swing trade using the price action. But with my personality, my style, I like to day trade. And it would be great if the VIX can pop up. And for that to happen, 25 and 26.5 must clear. If those clear, guys, This is breakout mode. We got this wedge here. Breakout mode. That could be very bullish for the VIX. Okay. Now, if we're gonna get bearish or stay bearish, 23.6 must break down to give us that. For me to trust a rejection. 23.6, 22.4 fails. 20.8, 19, and 17 incoming. Guys, thank you so much for watching. I love you guys so much. I really do. You guys are the best. Thank you guys for supporting Uncle's dreams. I love that I can serve you guys, and I hope and pray that I can serve more and more people in the future. Get more people to love price action, because price action trading is super powerful. Okay? I believe if more people learn to trade price action, learn to read it, they can swing trade, they can day trade, they will have more power, more money in their pocket. That's my dream. That's my vision for the trading community. And Uncle wants to be part of it. I'm grateful that I am a part of it. A little small part, but I'll take it. You know what I always say? If you can't get the whole pie and you were only able to get a piece of the pie, that's a great day. That's a great day. Blessings on blessings. Peace.